All right. Haven't done one of these in a minute, but I think it is due for one since a lot of interesting stuff has happened. So last week was the beginning of tech earnings for the quarter, and despite the fact that they were positive as far as the one that were released, it still turned out to be selling. The investors just basically sold through. We did get a somewhat of a relief rally on Friday, but or Friday and Thursday, uh, but it sold off right away. Failure to create higher highs, failure to break previous week high. As far as I'm concerned, we're going further down. ES is relatively weaker than, or relatively stronger than NQ. NQ is weaker. Um, Clearly created a lower low. So it did broke through the support that we had over here at 28,650, roughly on average. So as far as I'm concerned, NQ is just it's just gonna keep falling. I wouldn't be surprised if we go all the way down to 27,000. There is a significant amount of liquidity below. It's all right here, as far as I'm concerned. The bottom, at least the hard support, the next hard support would be 27,207. That's where some bullish liquidity would start coming in. As of right now, it's like the market is not it's not recovering. I do see ES slowly falling. I mean, granted, the money is rotating from tech stocks to uh, the SP 500. So my guess is that China is going to keep releasing these new AI models, flooding the market with those AI models that are going to outperform or, if not, equalize what current US models we have released. Like all of this is basically fed from the hype behind AI. The market has been flooded with billions of dollars on the expectation that AI was going to be such a great tool, right? It is a great tool, but the thing is there's new models coming out that uses less resources and old chips and just outperforming what we currently have. So as far as I'm concerned, we're way overextended. I wouldn't be surprised if we go back to 7,000 on ES, and I wouldn't be surprised if we go back to 27,200. The We're under gamma still on both. I just think NQ is just going to keep falling. It's going to keep trickling down, at least forming a lower low, if not retesting at least to 50% of the range. So if you're looking at 50% of the range, it's right in 27,002. So that's where I am thinking that NQ is going to go. Maybe the next, couple weeks, maybe 4 weeks, maybe 6 weeks, maybe 8 weeks. I don't know the time frame, but we're below 200 moving average on both. I think it's a time for a retest. This kind of thing is happening. Like if you look here, it recovered and then it did test the highs after falling through, and it's been falling, one, one, two, two. It did create a lower low here, but I would assume this one is the lower low. The rest is just like it's doodling under 200 trauma, and I think that's the start of it right here. So we might get one relief rally again from earnings potentially before it actually goes. But as far as I'm concerned, this is what I'm looking at, and then it's just going to keep falling. It's going to consolidate and then trend lower, so we might see that happening here. I think the next 3 months are going to be rather significantly bearish, and it's going to look just like that. Like it's going to be a consolidating 2 to 3 months into a lower low right before the end of the year, and then we might get a relief rally at the end of the year, or we get a rally in February of 2027. Which would be in this area here. So until then, you just consolidate here and then consolidate again, and then create a lower low, and then actually find some highs. I don't think we're going back to all time. I'd be very surprised with all these geopolitics stuff that's happening. I don't think it's going to happen. So as far as I'm concerned, this is what I'm looking at. I have been trading this fantastic strategy, opening range breakout. I have seen some very good trade. I'm going to make a different video on that whenever I have more data. I'm actually using someone in my group has sent a discount code for a prop firm. I mean, I'm testing this. I'm testing strategies on prop firm because I feel like forward testing is the best on prop firm because you have an extra pressure of drawdown. So I've been testing this strategy on there, and I'm going to have more data in the coming weeks. Uh, I want to see if that can pass on a strategy prop firm. I think that's going to be valid for some data and a video on it to explain how to use it. Just like the tick chart, at the end of the day, like if you look at these ticks here, first of all, this one was absolute rampage. That was the best trend of the day right off the rip. And then you had another one here. This one kind of created a lower low, so this one was a little bit of a trap. But then again, if you use the low as your stop loss, you'd get stopped out. And then on the lower low hammer in with volume, it led to the second best trade trending of the day, or trending trade rather of the day. So that strategy is still quite valid if you are to use the tick charts. Here was the opening breakout. I mean, the first one failed. Second one was a failure as well. That one would have stopped you out. This one you wouldn't have entered, but this one would have stopped you out. And then on the pullback, bullish engulfing into uh, the same buying volume, and then it just distributed. That one would have got you in, not stopped out, and then give you a 3 to 1 for 152 points. I'm testing it on the YM because I feel like YM is cleaner, smoother, and more per minute to yield on that strategy. So yeah, enough talking about strategy. Let's go back to VIX. VIX has seen some little bit of uptrend. Obviously, it's not like a full-on spike like we've seen, but we did get quite significant amount on Wednesday into another spike after recovering. That one was like right at 3 p.m. So it was kind of weird, but it did that was just weird because I've seen that on gold too. That was just some, I guess, from earnings. I don't know, something happened. But as far as I'm concerned, VIX is still above all moving average. Trauma is about to cross. Once it crosses, it's full up trend on VIX. So watch for the trauma crossing on the daily time frame. That's one thing I've been looking for. Same thing, dollars ramping again. That was a nice bull flag. I think dollar's going to create a higher high. I wouldn't be surprised if we go to 103 again, at least 103.1, 103. So I'm looking at that as well. It's going to apply pressure into the markets. I'm not looking at any stocks other than the defensive. I have shared a handful of defensive stocks that I have probed into. They are all up this week. I bought on Monday as a edge from futures because obviously futures I'm shorting, longing, shorting, longing. I'm basically, so if I do lose, then the capital made from the probe is covering my losses as a safety net. Also, I mean, the whole portfolio is bleeding from this downtrend, so that's also my edge to cover some bleeding equities. I did sell most of my LTIs. I mean, I kept a handful of them, but I sold most of them. All the profit that I had made through the last 2 years, I am down to only holding the big names that I believe still could possibly go just in case. But I mean, I sold 25% of the portfolio last week to buy 25% in the 5 stocks that I shared in the channel. So I think the one that's mostly up is like almost 10% in a week. So that's not bad considering the size of the position that covers quite a few. That being said, I'm not looking at anything else. I'm not buying stocks. I'm other than the 5. I'm not looking at earnings either until they come out. I'm looking at indices right now. I want to see some strength. I want to see some recovery. I want to see some movement. Otherwise, we're pretty sure we're going back inside this bottom range over here on mostly all indices. That being said, I will continue monitoring the strategy trade, and obviously, I mean, the market looks bearish, right? I mean, the market is bearish. The market is not recovering fully yet. It hasn't created a defined reversal. I'm still bearish. Oil is still ramping up until oil breaks the 66 marks that maybe could go fill somewhere around 60 to 50, 55, 56. As far as I'm concerned, it's a full ramping oil, and that is applying pressure into the market. I don't see it go higher than 100, 104, maybe 95. I don't think it's going to keep going higher, but you never know. It's looking pretty bullish right now, especially after a lower low. That's a V-shaped reversal. There could be a retest of 85, 83-ish, somewhere there about in that area. But as far as I'm concerned, it's probably going to keep going higher. Um, it's not looking good for the market. It's not helping the market recover. That's for sure. I can tell you that right now. This is fucked. I'm not even gonna get in there. Gold. Gold's still in the channel. It's beautiful double bottom. I think gold might actually get some highs, but yeah, I mean, it's consolidating in this area and it's leading into, it's either going to continue lower, retest 39.50, or it's going to keep going higher. Now, granted, I think it might retest that because the 200T is still aiming down. Once that's leveling out and then maybe go back up, it could possibly get some more highs. But as far as right now, they're like 50 and 200 are aimed down. If 50 continues looking towards 200T and then it gets a death cross, we're going to fall right back down to 3,500. I don't see that happening because it's gold. It should be defensive. If the market continues falling, gold should rally. But we have yet to touch the top of the trend line, which I'm expecting some type of touch eventually because we've kept the downside and we've kept creating leg downs. So it's still a series of lower highs and lower lows, so it is in a downtrend. I am just looking at some reversal points where I can see that, it could potentially reverse. Last time, that's exactly where it reversed from to create its all-time high. So there's possibility that buyers could come in over here. It is at the extreme lows of that range. If it loses this range, it's definitely going to retest this area here, possibly stop at 38.20 and then 3,500. So as far as I'm concerned, that's what's happening. Same with silver. Silver might actually have a little bit more left in the tank. I think it might actually fall into the 50 range. I wouldn't be surprised. That would be the lower retest. If it doesn't, if it does, break lower here, it could possibly fall through or again continue higher. But the traumas are still aiming down, so until they level out, we're looking at a potential death cross coming in the future. Don't know when, but they're still quite extended from each other, so just gotta wait. But I'm not bullish on this until it breaks above 61.2. We've been under 20T since the start of May, so there's very likelihood that it is going to attempt, if it's not creating a lower low, it's going to attempt some highs. So that's what I'm waiting for. Other than that, I don't have anything else. I've been very defensive. I'm playing smart. I'm doing uh, I'm doing my homework and just playing slowly, playing smart. Just be defensive. Just wait. It's you don't have to short everything to hell or wait for a reversal. You just play the price action. It's very simple. Don't overcomplicate it. But yeah, that's my analysis for this week. Waiting for more earnings, waiting for the Fed meeting, waiting for data, and just be patient. It's a recovery month or a fall through. It's very simple.